Hey there, fellow investors. Welcome back to Investing on a Dime. Today, we're tackling a question that's at the core of your investment strategy: long-term or short-term? What's the right choice for you? Long-term versus short-term investing, decoding the differences. Investing is like a journey. The path you choose, be it long or short, has a significant impact on your financial destination. So, let's dive right into understanding the differences between these two approaches and explore their respective benefits and risks. Long-term investing, the patient path. Long-term investing is all about playing the long game. When you invest for the long term, you're typically looking at a horizon of 5, 10, or even decades. This approach is patient, and it's often characterized by buying and holding assets, like stocks or real estate, for an extended period. Benefits of long-term investing. So, what's in it for you if you're willing to play the long game? Firstly, you're more likely to ride out the ups and downs of the market, thanks to time's magic. And, historically, long-term investments have the potential for higher returns. The longer you're invested, the more time your money has to grow. Risks of long-term investing. Of course, there are risks too. You have to be comfortable with the idea that your investments might see downturns, and you won't panic. Additionally, it's essential to choose the right investments and stay informed.